The Financial Survival Network, helping you to survive and thrive in the new economy. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. Obviously, the complexion of the stock market, the precious metals market, the futures, options markets, everything has changed in the past 4 or 5 weeks. And who better to talk to than Gary Wagner? He is, in the words of Bloomberg Television, one of the world's leading metal experts. His site is thegoldforecast.com, and this stuff's in his blood. Gary, welcome back to financialsurvivalnetwork.com.
Thank you very much, Kerry. How are you today, sir?
Doing great, but probably not as great as you with the blue skies of Hawaii and the beach and all that good stuff. But I'm moving down to Florida soon, so it's not Hawaii, but at least there's water and sunshine year-round.
That's right. At least you won't have to scrape the windows and worry about how much salt is on the streets in the morning, huh?
Yeah. Now that you put it that way, I really want to get there, but probably in the next 2 to 3 weeks, I'll be down there doing the show from there. And, I'm really looking forward to it because I've been in the Northeast my whole life and I've wanted out for at least 15 years. Now all the kids are away at school or on their own. And finally I got the opportunity to do it. So I am ready. And
there you go. and the stock market is working in your favor too, right?
Oh yeah. Well, the gold market and the silver market, it looks like they're back to doing what they do best, which is discounting the future that the Bernanke and the elites have in store for you.
Absolutely correct. I mean, the interesting thing is we watched the market, after it hit the record high, it really sold off hard. It came down roughly $400, but it kind of stayed in one place. It kind of found a bottom, and it didn't move up too much or down too much. And of course, a couple of weeks preceding the announcement, the announcement I'm speaking about, of course, is QE3, but you started seeing some action again in the markets, and you started seeing buyers come in that weren't. And the real indicator to me was what I have now termed the triad got in and bought. And who's the triad? Well, you've got George Soros, you've got Gartman, and you've got what's his name? Paul Jones, I believe,
Paul Tudor Jones.
Paul Tudor Jones. So
and you got, what's his name? Paulson.
And Paulson, yeah.
Paulson was
so you had all of these people buying, preceding this market moving up. And you know what? They for the last couple of years, they have really been the smart money. They tend to get in the market before the mainstream and out of the market before the mainstream gets out. And they were getting in. And that, to me, was a big indicator.
Yeah, well, to me, I could see, it looked to me like the cartel or whomever is manipulating the prices, the movements in the market just totally changed overnight. It'd go from being up $20 in the morning to down $20 in the evening. And from there, it went up $2, $3 and closed. And then it went up another $2, $3, closed. And you had this for a few weeks on end with seeming no resistance, like the traders were testing the waters. And then all of a sudden it just went up and very little backlash. And then, of course, last week's announcement, which was the final confirmatory signal that, yes, the market has changed.
Absolutely. And I'll tell you one thing that did take me by surprise, and that is I really was looking for some sort of announcement by the Fed. If they were going to do something, they were going to do it now. That's how I felt. But I also felt that much of it was factored into the market because you saw this market moving up on a consistent basis a week, 10 days prior to the announcement being made. And typically what you'll get is if there's no announcement, since that's been factored in other words, there's a premium on the price of gold due to the belief that Bernanke will announce something. If he doesn't, the market takes that premium out and you get a drastic downturn. If it comes in with expectations, a lot of times that's been factored in, so you don't get this huge move up. But what surprised me was the fact that what Bernanke did, I thought was a pretty bold move in that it was open-ended. And by saying it was open-ended and he would continue at $40 billion a month to be buying assets, basically mortgage-backed assets, that he was saying, look, we're going to flood the market. We're going to turn these printing presses on, and we'll turn them off when we see some kind of an effect. And that was something we've never heard from Bernanke or the Feds.
Absolutely correct. And obviously the smart money knew about this before anyone else did. And that's why you saw the markets turn on their head. It was an amazing thing to watch. I've been saying this for weeks. I saw it early August. It just changed, which meant that it no longer became a trader's market. That I think people who actually are looking to acquire metal moved back in. And I guess they were the big guys, the guys with millions of dollars or hundreds of millions or billions of dollars at their disposal who can just go in there. And the interesting thing now, Gary, will be to see, will they leave it? Are they going to withdraw now that they've made their profit? Or do they stay in there because they know that a lot more is ahead?
That of course is an interesting question. My personal take on it is that, as I said, in the past, we would get this Bernanke effect. It would come out and there would be some sort of statement. You would get a rise in the market in gold and silver specifically, but that rise would be really short-lived. You'd see it last a day or 2 days, and then the market would await new news, and on a lack of news, it would be flat or sell off. If there was some kind of news which was construed as bullish, of course, it would move up a little bit. But on this one, we saw an effect that was ongoing. And for example, today the market was pretty flat overseas. It was up a couple dollars. Actually was down, I believe, to 1755 was the low. When it hit that low, buyers came right back in the market. And now it's off only, by $5 or $6 last time I looked. So the buyers are definitely in the market, and I think they're in the market for a longer play this time than we've seen in the past.
Yeah, it's looking more and more obvious that is the case. So here's the question, Gary. The resource stocks, the mining stocks, have been in the dumps. I mean, when you look at the impact that the correction had on these companies, some of them have viable projects that could be brought to, a successful conclusion, and yet they have no ability to raise capital right now. Is that a safe place to go? Do you put a little bit of money into there and look for the ones that are about to be producers or recent producers? How do you play that market, Gary?
That's a $64 million question. I wish I had a straight answer for you on that. Because what happens is whenever you start looking at mining stocks as opposed to maybe the electronic traded funds like the gold, Spider, and whatnot that have a direct correlation, once you bring, of course, management into the mix and you bring operating capital into the mix, you've got a new ball game. And that's a ball game that I do not know how to put the odds on. Because to do that, you've really got to research the company. Now, the one thing that I have done personally is I have invested in gold funds that primarily spread the bet across many of these mining stocks, because personally, I don't believe I have the ability to properly handicap or select these things. So what I do is I just make a broad spectrum bet on certain funds.
Right. So what kind of funds are we looking at here? Is like the gold miners, the GDX or GDXJ?
The GDX is good. I've got some in. It's an Oppenheimer precious minerals and metals fund. that has been in existence for about 10 years, and it's had decent performance. But yeah, I would look into the different funds and, of course, talk with your prospective advisors, the ones that you have confidence and trust in, that believe are looking at things in your best interest and not necessarily theirs, and work with them closely. The other thing is, I am an adamant believer of owning and purchasing and storing your own precious metals. I bought some silver last week, for example. And I'll just buy, as many as I want, but I'll buy the 1 ounce or the 10-ounce bars, and I buy them and I hold them. There's an intrinsically good feeling about not only owning the precious metals, but holding the precious metals yourself.
Mm-hmm. Yeah, well, it makes a lot of sense. Bought a little bit lately myself, and there's no subject for the physical, is there?
Yeah, absolutely correct. There's no substitute for the physical.
Yeah, well, it's a tough call though. But I guess if you're looking at doing it, probably makes sense to put the bulk of it into physical and a little bit of play, perhaps, in some of these funds. But obviously, we're not financial advisors. You have to talk to your own financial advisor about it and see what they think. But certainly, the physical is making more and more sense by the day. Even today, in a day where they've really been beating down the metals prices, it still doesn't get the feeling like it's going to, be a massive slam down that just stays there. Even though it's down right at this moment $15 the ounce, it doesn't feel like it's the real decline,
Absolutely. It was down, as I said earlier, 12, and I'm now looking at it, down about 1460. There is absolutely going to be support in this market. The support that I'm looking at right now is right around 1750. So when you get dips in that area, you want to be buying when other people are selling and selling when other people are buying. That typically is your smart money. And one of the plays that we have been making with my subscribers is we've been trading the futures markets. Now, of course, there's enormous risk. The risk equals the reward. There's no way that you can say that this isn't a safe vehicle. But for example, on this last trade, we started accumulating at 1636 is where we initially bought. So we've got so much profit right now built in, and we've moved up what's called a protective stop, so that even if the market comes down hard, we're going to come out very, very nicely and with a really, really good profit. Futures is a very good way, but it's something that you want to put a very small percentage of your overall portfolio. And let's say that you've got your entire portfolio is $1. You want to look at 10 to 15 cents of that dollar in the precious metals. That's my belief. And out of that 10 or 15%, you maybe want to earmark a portion of that for something a little bit more speculative, like the futures markets, or you can look to play the funds or the stocks and then keep the bulk of it in physical. Either store it with someone that's a highly regarded, trusted company that you feel good with, or keep it yourself.
Yeah, it makes a lot of sense. Well, Gary, we got to get going now. So to find out more about you, get your sample subscription, where do people go?
Yep, we offer a free trial to our newsletter. It's thegoldforecast.com, one word. And you can try us out for free and see if it's something that suits you and something that you're comfortable with and something that you think makes sense in your portfolio. But I will tell you this, Kerry, I think that what we're witnessing now is the beginning of something big. I think that we're going to see gold over the next 6 to 8 months. I'm not talking short term, but over the next six to 8 months, go to a new record price high. My projection is maybe Feb to March of next year. Anywhere between 2,000 and 2,200 is what I'm looking for. So if in fact it comes close to that, there's a tremendous amount of profit potential in this market. And I think personally, the best is yet to come.
Yeah, it's definitely a place where you want to be. And if you want to find out about what to do, more information, financialsurvivalnetwork.com. Don't forget, go to preparewise.com. Buy emergency food now while you don't need it. Type in LUTZ in the coupon code, get a good discount. Gary, we will talk to you in a couple of weeks, month, and we're going to follow up and see where these markets really are heading.
Kerry, always a pleasure speaking to you. Hopefully next time I'll talk to you from Florida.
Absolutely. Be well.
Hey, you have a great day.
Thanks.